Welcome back to the channel, everyone. Jay here. In today's episode, I want to give you all the information you need to get the most returns out of your 401k. Mismanaging your 401k can cost you hundreds of thousands of dollars and years off of your retirement. Today, I'm going to break down my entire 401k. I'm going to show you what I'm invested in, why I chose these funds to put my money into, and I'm also going to teach you guys step by step how to analyze these funds so you can pick the best investment for you. Before I drop some of that 401k special sauce on you guys, don't forget, hit that like button and subscribe to the channel. All right, let's get into this stuff. My 401k is coming in around $96,000 right now. But remember, there's two different types of 401ks. There's the Roth 401k and the traditional 401k. The Roth 401k, you choose to pay taxes now, so you don't have to pay them later. And the traditional is you wait until after retirement to pay taxes on that money. The first thing we're going to do is we're going to go over to our account summary. All right, here's the page where it breaks down everything in your 401k. For this year, we are up 11.75%, which is pretty good considering the recent pullback. We were up even higher about a month ago, and then the market has pulled back considerably over the last 3 or 4 weeks. And then we can see our personal rate of return for a quarter, 1 year, 3 years, and 5 years. So it's always good to gauge yourself on 5 years so you can really see over a big chunk of time what your average income on your investments are. And we're coming in a little over 7.5%, which is awesome. That's where we want to be. If we can get between 7 and 10%, we could add hundreds of extra thousands of dollars to our 401k and we can retire a little bit early. You really want to try to get over 5%. Here's a quick little tip, everyone. In my 401k, I put in 5% to get a 4% match. That's why we can see the balances over here that I'm looking at. But remember, when you're doing the Roth, this $56,000 and the gains with that money, that is the stuff that's not taxable. The safe harbor match is taxable. So always know that going into retirement, that a chunk of your money, usually around half, is still going to be taxable. All right, everyone, here's a look at all the funds that I am currently invested in. If you look at future contribution percentage, this is what I'm putting my money into right now. 40% in Vanguard 500, 50% into the Vanguard Growth Index, and 10% into the Vanguard Information Technology Index Fund. Over on the right-hand side is my balances. This is how much money I have in each of the funds. The biggest portion of this 401k is in the Vanguard Target Retirement Fund, set at $2050 with $67,000, and then about another $30,000 spread out between these other funds. We're about set on the Target Retirement Fund here, so now we're just putting money into these other funds, especially since there's been a sell-off over the last couple of years. We really want to put our money to work for us, and this is the way to do it. Okay, here's the little pie chart here. Growth and income is coming around 70%, aggressive growth at 5%, and regular growth at 25%. I think that's a good balance. Our goal moving forward is to get the red and the orange growth and aggressive growth to balance out with the growth and income parts of this portfolio. Next, what I'm going to do is I'm going to break down all of these funds for you. We're going to see the year-to-date gains, the 5-year gains, and what particular stocks are actually in this fund so you can have an idea of what you're actually investing in. All right, the first fund I want to talk about is the Vanguard Target Retirement 2050 Fund. As you can see here, year to date, they're up 10%, which is pretty good. But first things you want to do is you really want to check out these expense ratios. Morningstar's ratings are always good too, 4 out of 5. And this yield trailing 12 months means that they're giving a 1.83% dividend on your money plus the share appreciation. So we're up around 12% between the year-to-date performance and the dividend performance. Now let's check out the 5-year. Not so good, right? So over the last 5 years, this has only returned 10.41%. You are collecting the dividends along the way, but the compound annual growth rate over 5 years is around 2% plus the yield. So you're getting around 3% on your money, which is not very good, but it's stable. There's not a lot of upswings. There's not a lot of downswings. So this is a very safe way to invest your money. That's why the bulk of this 401k portfolio is in this target fund. All right, let's move on down the line. Let's check out the Vanguard Value Index Fund. Year to date, they're not even up 1%. which is not very good at all. Luckily, we only have a small percentage of our money in this fund, but they do, however, pay a 2.5% dividend, which is pretty good, and a very small expense ratio. So as you get older into your 401k life cycle per se, you want to kind of go into more safer index funds. They're not going to have the big upswings, but they're not going to also have the big volatile downswings like we've seen in some of the growth index funds over the past few years. So let's check out the 5-year returns on this Vanguard Value Index Fund. 27%, not bad. About 5-6-ish percentage every year you're getting on your money, plus the 2.5%. So that brings you in that 7.5% range. So that is not too shabby at all for the Vanguard Value Index Fund. And there's not a lot of risk here, which is great. Moving on down the line, we're going down to the Vanguard 500 Index Fund. This is one of my favorites. Year to date, they're up 14%. Their trailing 12-month dividend yield is 1.5%, so that's pretty darn good. They have a very small expense ratio, and the Morningstar 5 out of 5 stars. So you're getting almost 1.5% plus the 14%. So you're looking, 16-ish, 17% on the year for the Vanguard 500 Index Fund. And then let's check out the 5-year chart. That growth is absolutely amazing. 50% over 5 years. That's a 10% compound annual growth rate. Plus, you're getting the 1.5% on top of that. So we're looking at 11% each year for the past 5 years on average for the Vanguard 500 Index Fund. That is great. I mean, you can't really ask for better than that. But check out Vanguard's Growth Index Fund. The Admiral shares are up 30% year to date. And that's because they're more concentrated on the tech sector that had a very good year so far this year. And if we look at the 5-year rate of return, pretty darn good, pretty impressive at 72%. That's around 12, 13% compound annual growth rate. And you can see the higher growth funds give you less money in yield. You're getting about 0.5% dividend on your money, but the growth rate, man, that's so good. You're getting nearly 15% on your money. You can't beat that. That is absolutely incredible. This is one of my favorite funds. If you can average 15% a year over the life of your 401k, you are going to make boatloads of money. Enough boatloads to buy your own boat. All right, check it out, guys. Then we're going to go to the Vanguard Mid Cap Index Fund. As you can see, the year-to-date growth only 5.4%, and they're giving you a small yield at 1.5%. This is not my favorite fund. I'm actually considering taking the money that I have in this Vanguard Mid-Cap Index Fund and putting it to work somewhere else. As you can see, but the 5-year growth is way better. So you're getting 6% each year on your money. For a 30% in 5 years, not too shabby with the 1.5%. So you're getting around 7.5%. That's not too shabby. But the last year to date, it's not the best, as you can see, 5%. But when you zoom out, when in doubt, zoom out, 30% over the past 5 years gives you that 6% compound annual growth rate, plus the 1.5% brings you up to around 7.5% per year, which is pretty darn good. And then our last but not least is the Vanguard Information Technology Index Fund Admiral shares. And over the past 5 years, oh my gosh, 108%. Wow. That is just absolutely unbelievable in the past 5 years. And year to date, up 33%. I mean, these funds, the tech sector is flying high this year. You're not going to get these type of gains every year, but sometimes the risk it for the biscuit, guys. That's what I always say. If you risk it for the biscuit, you have a chance to absolutely crush the market returns. I think VOO, the fund that tracks the S&P 500, is doing around 7-8%. So you are doing 4 or 5x what the S&P 500 is doing this year. But when there are downturns, you're going to get smoked. But what you got to do is just keep dollar cost averaging, putting that money to work for you each month. And then when it rips, you're going to absolutely crush the market. And that's what we try to do here. We always try to beat the market or stay with the market. If we can do 7 to 10%, and then some of our funds do 30, 40%, our 401k is going to make us a crap ton of money over the life of the 401k. All right, now what I want to do is I want to go through each one of the funds, guys, and I want to break down the holdings. So we're going to see what is made up in these funds. Usually there's a weighted percentage of the top 10 stocks between 20, 30, 40%. And then of those top 10, sometimes it's spread out a lot and sometimes it's very concentrated. So you have to be aware of what is actually in the fund you're investing in so you can kind of gauge the risk that you're at for each particular fund. All right, let's do it. All right, everyone, the first fund I want to break down is the Vanguard Target Retirement 2050 Fund. So what you're going to do, you're going to go into Yahoo Finance, you're going to type in the index fund or the ticker, and this will pop up. And then you're going to click on Holdings. Then all this fun stuff's going to pop up, right? And it's going to break down everything. This is how it's broken down. This fund has their 88% stocks, around 10% in bonds, and around 2.5% in cash. And this will go down to sector weighting. That's the weight of each sector, like healthcare is 11%, financial services 15%. And it really shows you where this fund is investing their money. And this fund is a little different, right? So this is a fund made up of other funds. So 98% of the total assets are in these four funds: a total stock market, an international stock market, a bond market, and an international bond market index. So the bond markets, only makes up 9%, but these two other big funds are very broad funds. So now what I want to do is break down some of these individual index funds. Like, check this out. This is the Vanguard Value Index Fund, and this is 99% stocks, and this is how they break down their sector weighting, their largest being financial services. Okay, then we're going to go down to the top 10 holdings. This number right here, the 22.84%, is very important. So that means of these 10 holdings, it makes up around 23% of all the total assets in this fund. Okay, in this fund, the number one weighted is Berkshire Hathaway at 3.65%. I like this fund because there's not a big bulk of any asset that's making up the majority of these top 10 holdings. So of the top 10, it's only 23% of all the funds in this index. Here are some names that we're all familiar with, like ExxonMobil, Johnson & Johnson, JP Morgan, Berkshire Hathaway. And year to date, you can see only 2.5%, and the 5-year average return is around 8%, not too bad. All right, let's bang over to the Vanguard 500 Index Fund. The overall portfolio, 99% stocks, and their biggest weighting is technology, around 30%. So this gives you a nice balance of technology and stuff like real estate, healthcare, and consumer cyclicals. All right, so as you can see, the top 10 holdings is a little more concentrated in this fund. Around 30% of their assets are built of the top 10 stocks that it has in this fund. All right, number one asset in this fund is Apple, which is 7.5% of the weight, which is not too bad. You really want to keep stocks in these funds no more than 5%. Apple's starting to get up there at 7.5% because they don't only get share appreciation, they have a nice dividend too. But then we have Apple, Microsoft, Amazon, Nvidia, Google, Tesla, Meta, Alphabet, Berkshire, and United Health Group. Some of the best companies in all of the United States make up this fund. And year to date, up 15%. The 5-year average return is at around 11%. This is a really good fund. I love the Vanguard 500 Index Fund because it also balances out the weight on its own. So this 500 fund, if these companies aren't performing, they will get kicked out of this fund. I'm only going to do one more for you guys because I don't want to break down everyone because it's pretty much the same with just minor differences. But this is the growth fund, the Vanguard Growth Index Fund, coming in at $142 per share. 99% of the holdings are in stocks. And look, this one's even more weighted in the tech sector at 45%. And then here's the top 10 holdings. This is a lot more risky when 50% of this entire fund are these top 10 stocks. And you can see Apple makes up 13.5% of this index fund, which makes me a little nervous. So that's why I only have a small percentage of my overall 401k in this fund. But if these top 10 stocks rip, you're going to make a ton of money. Here we go. It's Apple, Microsoft, Amazon, Nvidia, Google, Tesla, Meta, Google Class C, Eli Lilly, and Visa make up the top 10 holdings for the Vanguard Growth Index Fund. And remember, guys, this is 50% of the total assets are these top 10 stocks. So you kind of live or die by these top 10 stocks. But they are an amazing company, so you can't really go wrong with this index fund, guys. So the year-to-date return 30%. 5-year annual return 13%. Oh my gosh, man. That is absolutely remarkable. 13% compound annual growth rate. Wow. That is absolutely fire, guys. If you do this fund over the value index fund, you're going to make, over the life of this 401k, hundreds of thousands of more dollars, and you're going to get to retire way quicker than you would if you were in a safer, target fund or value index fund. I hope I didn't put you guys to sleep with that video. No, I'm just kidding. But if you made it all the way to the end, you are taking the right steps in optimizing your 401k and making as much money as you can for your family. And that's what it's all about, right? If you haven't yet, hit that like button, subscribe to the channel, and if you like content like this, leave us some comments below. What are you doing with your 401k? I want to hear all about it. All right, we'll catch you guys on the next video. Peace!